Joining me now in the studio for a business update is Charles Pellegrin. Hi, Charles.
Hi, Hex.
You've been looking at the latest market reaction to those early results we've been seeing out of India. Vote counting still underway in India in the largest democratic exercise in the world.
Mm-hmm. And after a record rally in the past few days on Indian stock markets that saw the National Stock Exchange of India, the Nifty 50, beat new records, this Tuesday we're seeing shares slump as results are proving to be tighter than anticipated. As you can see, down almost a 5% lower compared to the highs we saw yesterday. But with Modi still expected to win a third term, only with a slightly smaller margin. At the top of the hour, as I said, the Nifty 50 trading about 5% lower. Similarly, we're also seeing the Indian currency, the rupee, lose in value against the US dollar after making steady gains in the days preceding the results based off of exit polls. As you can see, now takes about 83 rupees to buy $1 US. Just to correct that graphic there, which we'll update next time we're on. So that's where we're at. The currency and the stock markets falling compared to the expectation that Modi would have a landslide win in these elections.
And all of this, Charles, suggesting that investors really are looking for continuity with a third term for Modi.
Mm-hmm, absolutely, and one where he has really free rein to continue with his pro-business policies, so with a clear majority in Parliament. The rally we saw in the markets in the last few days came on the back of the news given last Friday that India's economic growth came in at 8.2% in the last fiscal year, which ended in March. That was above the 7.9% forecast. India's central bank, the Reserve Bank of India, is also forecasting 7% growth in the current fiscal year, more than double the global average. Many are pointing to the government's policy of investing in large infrastructure as reasons for that high growth rate, with new highways, new buildings, new ports and airports being built. But Jamil Ahmad, chief analyst at CTC Group, told France 24 earlier that many investors are bullish on India for reasons that go even beyond who is in power exactly. Let's take a listen.
India's economic growth has been so superb over the past 1 year or so, and actually just before then too, where we're actually seeing a lot of the headlines in the 2020s regarding India's trajectory is actually very similar to the growth story of China in the early 2000s. And we know today how important China is to the world economy. So the projections are that the current leadership will remain in place. Over the longer term, that is more likely or not to be better for the India markets and those asset classes, because continuity is always something that investors prefer. But generally speaking, India is expected to become one of the largest economies in the world. It's already on its way there within the next couple of years, and it will surpass some of the more developed markets that we might focus about more in day-to-day markets. But in the future, we're going to be looking at India even further, and that's why these election results do matter.
And Charles, the fact that results are tighter than initially expected, an indication that there is some dissatisfaction with Modi's economic legacy.
Mm-hmm. There are questions as to how many people are actually benefiting from that economic growth we saw over the tenure of Narendra Modi. A survey conducted before the election actually showed that 60% of voters were concerned about unemployment and believed that finding a job was tougher currently than it used to be. And a report by the International Labour Organization found that youth unemployment in the country is higher than the global average, and that 90% of the working population still work in the informal sector. But there is perhaps reason for hope. During his prime ministership, over 500 million people have actually opened bank accounts in India, suggesting a move away from cash-based informal employment. But anyway, all of this goes to show that often investors and voters don't have similar assessments of how an economy is doing.
Okay, well, Chinese online retailing giant Shein or Shein.
Shein.
Shein even, is reportedly on the verge of filing for London's biggest ever stock market flotation this week.
The fast fashion platform has regularly been blasted over environmental or human rights concerns, but with a huge valuation worth around 58 billion euros, the listing would be a really a great win for the city of London, which last year lost out a slew of large UK and Irish companies to listings in New York. Vedeke Bahel has the details.
It's the fast fashion behemoth known for its next-to-nothing prices. After repeated attempts to list its shares in the US, thwarted by frosty Washington-Beijing relations, Chinese firm Shein is poised to list its shares on the London Stock Exchange, with a valuation estimated at around 60 billion euros. The UK listing would be London's biggest ever stock market flotation. The country's Labour Party, widely expected to take power in the next election, has indicated its support.
Labour has met a range of companies, including Shein, that are looking to invest or list in Britain. Raising investment, productivity and growth is one of Labour's missions for government. We believe the best way to ensure this is to have more companies operating from and regulated by UK law.
Should the float be approved by the listing authorities, Shein would be required to publicise its results. According to the Financial Times, the fashion giant recorded $45 billion in sales and $2 billion in net profit, dominating the online retail market. However, Shein has also garnered fierce criticism by both environmental and human rights groups for unethical business practices. With accusations of forced labour and modern slavery, few or zero eco-friendly materials, abhorrent working conditions and even plagiarism from small businesses. To boost its green credentials, the company launched a resale platform for shoppers in France and the US, with plans to expand it to the UK and Germany.
I'll be back on set at 9:15 p.m. a.m. Paris time to look over those market reactions to the election results in India.
Shad Peleka, thank you very much.